Hey guys, welcome back to TTSMC Trader. How are you all? Hope everyone is good. Just bit curious if I will be able to finish my stream today or not. But I think everything will be good and there will be no load shedding. If you can hear me, please let me know that before we go furthermore. And don't forget to push the like button, by the way. Good morning, Tamimi. Thank you so much, brother, for being over here. Yeah, please let me know if you guys can hear me loud and clear. Thank you so much. Who else is over here? Just only Tamimi. Okay, I can see 9 people are watching, one likes. Can you guys please push the like button as well? Hey Aryan, how are you, brother? Let's first wait to see some other people to join and let me know to the comment who is here actually, except Tamimi and Aryan. Aryan, where are you from, brother? Loud and clear before you ask. Okay, it was loud and clear before I asked. That's cool, man. Reflect and grow is here. Good morning, brother. Yesterday, before I close my stream, was that yesterday? I think that was yesterday. Yeah, I tried a buy here from that gap. It didn't work, but later it has an opportunity to take the buy from this market structure shift fair value gap. Unfortunately, there was no electricity. I just let this go, but it was really awesome trade from there. I mean, if I miss the trade over here, that was a beautiful run for like 100 handle after getting that loss of 25 handle. Sorry, 20 handle loss. That could be a beautiful trade, but I were not there. Later, I actually watched another trade here, market structure shift, fair value gap, but it didn't work at all. And finally, the market went higher, but I was not actually watching the market around that area. So I didn't be able to catch that run as well. It was pretty good price action, except this huge consolidation around that area. I mean, after that run, this huge consolidation was like disaster. And then the fall, I mean, nothing to say about that. Today we had the CPI, and I can see this candle, the CPI candle. To be honest, this is not the CPI we love to look for. We love to look for a candle that will leave some fair value gap, and then we'll be able to target the 50% of that fair value gap. But this CPI candle doesn't match with any kind of requirement. So yeah, that was not a good CPI, by the way. Marquis, this week's price action is crap. So far, it's crap. Actually, to be honest, it's crap. Monday, Tuesday. At least the morning session is really so bad, absolutely bad. So today is Wednesday. Let's see, Marquis, if something good we can find from this market or not. However, let other people to join. In the meantime, we can see this price action a bit. However, this is a bullish market, and like the buy side here, the buy side all-time high is over there. And if you watch the other market, like they're building new all-time high, okay, around that area. So new all-time high is building from ES and YM, except this NQ still didn't reach to the all-time high. We have seen this earlier where market was building new all-time highs every time, like here market build the all-time high, and then it go back again all-time high around that area. I still I think that it will actually go for the all-time high, because if it really interested to not to go for that all-time high, it could give me some sort of big fall around that area by the yesterday's candle, or maybe by this candle. It could give me some sort of bearish market structure shift fair value gap to go for this low no week candle, or maybe around that area. As it didn't do that, I think it will go actually for the all-time high from that area. This is the bullish fair value gap. After the market structure shift, bullish fair value gap has been traded. There is two gap. Okay, one is entry fair value gap, another one is breakaway gap. This gap has been traded. Lowest down close, body close candle, order block. Trade this order block, and I need to see some kind of expansion right now toward the buy side liquidity, which is here residing around that area. This high, this relatively equal highs, and finally the all time high. I hope uh, it's not gonna messed up again like this type of price action. We are not going to get it anymore. Instead of that, we are going to get a plain price action. So from the how to say, I mean, the daily chart, we need to look for some kind of direction. What direction this market is really interested to go. So to me, it seems like a bullish market. It like there is nothing that can tell me that it is going to fall. Okay, so to be honest, there is nothing. At least not now. I'm not seeing anything around that area to see this market is going to fall. It seems like extremely bullish market, so I should keep looking for the buying opportunity. Otherwise, if it falls, like it's unpredictable. So according to the logic of the price action, it should keep going higher. But if it falls, that is fate, that is luck. I'm wrong about my direction because the daily chart is not saying it is bearish. So I can't think about the bearish movement. But of course, the market can fall, right? Like there is no one who is going to control the market. From here, the hourly chart, this buy side liquidity around that area is my primary interest. I was thinking this buy side liquidity is going to be cleared by the CPI, but market didn't clear this buy side liquidity by the CPI. Previously, I was thinking this buy side liquidity will be cleared by the FOMC. Last week, FOMC didn't clear that buy side by the FOMC as well. So right now, I really don't need to worry about anything else except this buy side liquidity. Except this buy side liquidity, I really don't see anything. However, there is some kind of swing low here. This low is not a beautiful swing low, but some kind of low that has been cleared over here with a shallow run. And I have this clean sell side liquidity here, this low and that low. They're the relatively equal lows. So again, from the daily chart, I'm still bullish. I don't think this is going to fall. But if it started to fall, maybe from the last fair value cap around that area, so it's going to respect this last cap. Let me show this to you so that you'll be able to understand what I'm talking about. So this last gap may, I mean, if it hold the market and send it lower to clear this unfinished business and then this sell side liquidity is relatively equal lows over there, it's absolutely pure bad luck. Okay, I don't know what to say in this type of scenario, but to me, this buy side is too obvious to me. I'm not marking this new week opening gap this time. If you guys remember, it was important for me until this market came here. So when it came here, okay, done. The new week opening gap has already done its job. In my opinion, it has done its job. This time, it should keep going through this new week opening gap and it simply go for this buy side liquidity. Again, this new week opening gap is too extremely important. I mean, it's really important, but still, I don't believe that it's going to hold again and this send the market lower. It can happen, but I really don't think like that way. Otherwise, any sort of run toward this buy sell liquidity is an high probable buying opportunity to me. So to me, if I see like around 9:30, this is not the fair value gap that has been created. So if I go to the 15-minute chart, I'll see this big wick around that area. So I can't see anything here from the 15-minute chart. That's why I'm watching this hourly chart. So when this candle will close, maybe this gap is going to be a beautiful support and send the market higher for this buy side liquidity. So maybe around 10 a.m. this candle is going to close here. I mean, by reacting from the last gap, maybe it is going to close around there. Okay, so after 10, the 10 to 11 candle from the hourly chart is going to trade the hourly bullish fair value gap and then going for this buy side liquidity. This is possible. Otherwise, if it keep going higher, that is also acceptable. All I need to see, can it break this last fair value gap? So if it is closed above this last fair value gap from 5-minute chart, I'm more interested to look for the buy only for this buy side liquidity. Otherwise, if it failed to close above this gap, I will wait until 10 a.m. just to see if it really interested to build any sort of bullish gap. And after 10, when it will come to the hourly bullish gap, I'll start to think about the buy and I will just ignore this last gap and I'll think this last gap will be broken by the next candle of the hourly candle. If it really not interested to go for this buy side liquidity without building a bullish fair value gap and then trading this bullish fair value gap. In that type of scenario, I will see this last gap is no use after building this gap. Otherwise, if it just keep going higher, I will just wait for 5-minute candle to close above this last gap and then I will start to think about the buy without holding me back to wait for the bullish gap to be created, trade this bullish gap, then go for this buy side liquidity. But if you ask me, I really would love to see you to wait for 10 a.m. and I want to see this gap to hold a bit. The market is not going to break this last gap. It will wait for building a bullish fair value gap from the hourly chart and then trade this hourly gap and then finally go for this buy side liquidity. If you look over here, this low around that area, that has cleared this swing low over here yesterday. So it has cleared that low. After clearing that specific low, it just keep going higher. And in the meantime, in this whole price action, there was just like limited amount of bullish fair value gap. So first of all, there is no bullish fair value gap. Okay, so to be honest, nothing here. This is the last gap around that area to this leg from here to here, from low to high. This is the last gap. This is the entry gap. CPI sent the market until this last gap. So here is still some unfinished business. Market has just given me the market structure shift. I still appreciate if it fall a bit and then go higher for this buy side liquidity. However, in every single angle, I'm just looking for the buy side liquidity. Okay, I'm not including the sell side liquidity over here. This relatively equal lows and this obvious liquidity, I'm not including it. Okay. Because from the daily chart, I really don't see any logic over here for this market to fall one more time, then go higher. I really don't see anything over there. So I'm only interested to see this buy side liquidity. Maybe I'm wrong because this is really so difficult price action. I know some of you will argue with me, man. No, it's not difficult price action. It's really so easy price action. But trust me, when you will see one, two, three, four, like 4 to 5 candle around the session, 5 15-minute candle are sideways, it's gonna destroy you. Okay, like you are going to be destroyed by this type of 5 candles inside the session. Like almost almost every day. Okay, so around 9:30 to 10, it's just sideways. Market is not moving anywhere. So it's really difficult. Like over here around that area, market is just sideways with a highly volatile market. Okay, it's a highly volatile and it's just sideways. This is really so difficult to trade. In other words, like this type of price action is more beautiful to trade, where it is one-sided and it's very clear. Like it tapped here, the they're not going to be sideways from 15 minutes. They're not going to be sideways. So it has traded 1 by 2 candle, then this run has created. Okay, so this run I'm gonna expect it is going to happen after 1 or 2 candle that has traded this bearish gap. So 15 minute, 15 minute, 30 minute, it wasted to trade this gap, then fall, nothing to worry about. But when it is like 4 5 candle that is just sideways, it's really difficult to trade, to be honest. This is the CPI candle. I'm going to remove this one for now, and I'm gonna mark the quadrant level of this candle. Okay, so this is the low, this is the high. This candle, that is a very prominent wick. I mean, no, there is nobody who can argue with me with this wick. There is no other wick that is compare like it that is similar to this candle wick, right? It's absolutely clear to mark. Anybody can mark this wick. Now, not only because this is a very nice wick, but also it has taken these lows over here. This low, that low, that low, that low. All of these lows has been taken and it has traded a bullish fair value gap. So to me, this candle wick 50% is a very nice, beautiful I mean, last fair value gap to me. So if it fall here, I highly appreciate to take the buy from there. Otherwise, if it keep going higher and take this buy side liquidity, I think I will not wait for some sort of retracement. Around 9:30, I'll just simply go for this buy side liquidity and without waiting for any sort of retracement. Before anything happen, this is the candle close from yesterday, and this is the area where the market is going to open. Okay, so around that area, market is going to open around here. So there will be huge regular trading or opening gap up. This is really scary to me because whenever it build this type of gap up, it should trade at least the 50% of the regular trading or opening gap, at least the 50% or the upper quadrant, then go for this buy side liquidity. That is the easiest way to trade. Now think like that way. Market open here, just fall a bit, and then one candle come here, second candle can is going to take this buy side liquidity. Okay, so something like that, like 2 to 3 candle, it is going to clear this 148 handle. What can I do in that type of scenario? Nothing, man. Simply nothing I can do in this type of scenario. Otherwise, it's really so beautiful. If it really fall a bit, then clear the buy side liquidity. After clearing the buy side liquidity, maybe I'll look for this specific zone that still need to be traded. This is a specific zone over here that is still need to be traded because you remember, like we are seeing this liquidity void for a long period of time. This is a very nice, beautiful liquidity void area. It can't simply leave this area open like that way. So and from the regular trading hour, it's a very nice sell side liquidity around that area as well. So yeah, like after clearing this buy side liquidity, maybe this liquidity void could be a beautiful target. And if the market really interested to keep going higher and go for this buy side liquidity, that is also good because there is some regular trading or opening gap, which is also a liquidity void that can be a beautiful target around that area as well. But to me, after clearing this buy side liquidity, some sort of fall is obvious. So what I would love to see, if I want to trade this market, I wanna see this market to open here somewhere. I don't know where it is going to open, but wherever it will open, it will trade the regular trading or opening gap at first. Then it will go for this buy side liquidity. It will give me an opportunity to take a trade. If it doesn't do that, simply open, keep going higher. I know this buy side. Okay, not I know. I believe this buy side liquidity is going to be the target for today because CPI didn't clear this buy side liquidity, so market should target that buy side liquidity. So I know that I'm looking for the buy side liquidity, but if it doesn't give me the opportunity, I will just watch the market to clear the buy side liquidity without me. This is something very difficult. I don't think so I'll be able to finish my stream today as well because there is a huge raining outside. So I think there will be a electricity problem like very soon. Oh man, I don't think so I'll be able to finish my stream. But let's hope for the best. And for now, I'm going to mark this sell side liquidity around that area. More importantly, that sell side liquidity, it's really so beautiful to me. And I'm not thinking about this sell side liquidity right now. Right now, it's not important. First, the important part is this buy side liquidity. After clearing this buy side liquidity, this sell side liquidities are going to be my primary target. I will think like that way, okay? And so if you come here, this sell side liquidity, more importantly, to this huge liquidity void. I mean, it's raining. I don't, I don't know. I'll be able to finish my stream or not. That's good. Oh, by the way, you can see here the lower quadrant of this 15-minute candle, 15-minute candle wick. The lower quadrant is aligned with the 1-minute candle 50%. So that is also a beautiful area for this market to target after clearing this buy side liquidity. Okay. So there is some sort of buy side liquidity here. I'm going to mark that. That can be the primary target. And the secondary target is here, that buy side liquidity. Yep. That's cool. That's cool. Uh, Going to remove it from the hourly chart. I'm gonna keep my chart very nice and clean. We'll see. Let me know your bias, brother. I mean, what you are thinking, what is going to happen. Hey, Sharada. Hello, sister. Seems bullish at least till there is 30K previous week high 3074, 374, 374. So here's summer. I think you are looking for, yeah, like 374 is very near to the 394. So it's like 20 handles. Just the difference between 374 and 394 is just 20 handle. So if it can reach for 374, I believe this buy side will be cleared as well. I think so. Okay, that is my highest priority today. So I think the market will go for this buy side liquidity. I was really thinking that the CPI is going to clear this buy side liquidity. And then the whole day I will keep looking for the CPI candle. CPI candle is going to be my target. But this CPI actually really messed up. Okay, so it's really messed up. What type of candle? Like all of this consolidation, then boom, one candle, boom. Okay, like this is really disgusting. Like look at this, all of this candle, then boom, here. This is really disgusting. Consolidation, boom, consolidation, boom. How can someone trade in this is from 1 minute chart, guys? Okay, this is from 1 minute chart. So watch all of this price action. So a lot of consolidation, small candle, and boom, small candle, boom. Very long time consolidation, then boom, these big candles over there. This is tough to trade. Like this is easier to trade. Like this type of candles, they are very easy to trade. Like this type of candle, they're easy to trade because it's not one candle, it's a continuous candle. But like this type of price action is difficult. Long time consolidation, then one candle. Long time consolidation, one candle. That is difficult. Yeah, let's see. Bom dia, muito bem, obrigado, senhor. Tudo bem? Aryan, can you short from 29960? 29960. I am not watching any type of sell from here. Like this is the primary buy side liquidity here, internal buy side liquidity. So around 9:30, I would love to see it to be taken and then target the regular trading or opening gap 50% or the lower quadrant of the regular trading or opening gap. So that could be a beautiful target after clearing this buy side liquidity, after trading the new regular trading or opening gap, then this buy side could be a beautiful target. Like it should be like zigzag. Okay. So here, here, here. Like this should be a zigzag like this way. Now I'm not saying it has to come here, it can come here, it can come here, or it can simply trade this last gap, this candle low, this candle high, simply trade here and then the buy side. But some sort of regular trading or opening gap I'm expecting to be traded at first before reaching for this buy side liquidity. So first I want to see this buy side to be cleared, which is an internal buy side liquidity. After clearing that internal buy side liquidity, fall toward the sell side, which is here, relatively equal lows from this candle, obvious liquidity to clear those liquidity, and after that to trade at least the 50% low upper quadrant, anything from the regular trading or opening gap, which is going to be aligned with this 15-minute big bearish week. The bearish week from here, from 15-minute chart, the quadrant level is over here. I still didn't mark the regular trading or opening gap. After the market open, I'll mark the regular trading or opening gap as well. So any of these level will be traded. I'll keep looking for the buying opportunity for this buy side liquidity over here. So if it leave this buy side liquidity, that's gonna be difficult to frame the short at first. Okay. If it leave this buy side liquidity. So I highly appreciate if it can simply take this buy side after some retracement. Okay. It has to retrace a bit so that people will think that old high is going to build a new high over here. It's a very strong resistance. So when it came here around that area, everyone is thinking, oh, okay, this is a very strong resistance. So take the sell from there and market will start to fall. Those people who didn't believe this is a very strong as a resistance, they will start to chase the market. Sometimes we ICT trader also chase the market, I know, but they will start to chase the market and then this market will trade. I don't know which gap, but some of this gap will be traded, and after trading this gap, market will simply clear this buy side liquidity. After clearing the buy side liquidity, market should not go toward this buy side liquidity. It can do that, but I'm not expecting that is going to happen. So it will just take this buy side liquidity and like breakout trader. So resistance is broken, use it as a support. So they will take the buy here, the market will fall again. So the sellers, they will get stopped out here. The breakout buyers, they will get stopped out over there. And then the market will target this buy side liquidity. That's my interest to see at the beginning. Good morning, Suziban. Good to see you today. I'm just not sure how long I'll be able to over here because it's raining outside hard. Cats and dog, okay? I hope I'll be able to finish the stream without any electricity interruption. Otherwise, like at the beginning, I frame a trade yesterday. Remember, guys? Like I framed a trade, it didn't work, and then this beautiful 100 handle move, I missed it because there was no load shedding. I was only interested to take the buy yesterday, if you guys remember. So yeah, that is difficult actually. So it came actually to this gap and now going to take this buy side liquidity. That is like something very obvious. Like any of this gap will be traded and then trade this buy side liquidity, not the finished job. It will start to go higher at first. Okay, so everyone will start to think this is a very strong support right now. They will start to take the buy and then the market fall again. So that is my opinion and my hope. This is going to happen like this way, zigzag. Hey Chatur, good morning, brother. Daniel, good morning. Yesterday's low also closed the last Friday's unfilled opening gap range. Wow, that's also good news. So yeah, that is also giving me some hope that this buy side is going to be cleared. So I think I'll be right, and this market will clear the buy side liquidity by today. But before taking this buy side, it will fall a bit. If it do that, I'll be able to enter into a buy trade. So what I can do, I can let this leg to go, this leg to go, this leg to go, and then I can try to take that leg, just that specific leg. I can do that as well. But we'll see. I'm bullish. We took CPI high now. Okay, the CPI high is already been taken. That is also good. Still this is working as a resistance. Okay, so you're seeing this line over here. This is zone actually. This zone is holding the market. So everyone is going to think that this is going to work as a resistance. So they will start to take sell here, not buy yet. When it will be broken, they will start to look for buy from this resistance zone. So if for example, at the beginning it will take this low and then clear that high one more time. So it will take this low. They will start to think this is a very strong resistance zone. They will start to take the sell from anywhere here. They will try to take the sell, and then the market will stop them out. Then they will start to take the buy when the market will tap here, and then the market will keep falling again. This fall, how long it will happen, I have no idea. That is the only thing. I have no idea how long this fall will happen. But every single bullish period is gonna be a beautiful bullish period to me. So this is the regular trading or opening gap. Market is going to open within a second here. So this is the closing from yesterday. This is the opening from today. Quadrant level. That is the regular trading or opening gap. Okay. So I can see this week 50% and the regular trading or opening gap 50% are aligned with the same level, around the same level. Okay. So I highly appreciate if it fall and at least trade this area, that area. That could be awesome. Before going for this extreme buy side liquidity. That is the extreme buy side liquidity. I want to see this buy side to be taken after trading this specific zone. So what I'm going to do, it's bit risky, but I'm gonna try this one. When this low is going to be shifted with a bearish fair value gap, I'm gonna take a sell around that area. Okay. From here, I'm not sure it will fall until that area, but I will try to make sure that I have already taken some partial because that's a huge range. From here to here, it's 142 handle. I don't need all of this 142 handle. So all I'm going to catch some portion of the run from here. Yeah, I'm still saying this is a bit risky because this leg can happen. I'm just not going to believe this is going to happen because one candle has closed. So the job is already been done over here. So I don't think so it is going to happen one more time. Still, that is a bit risky, but I'm going to take this trade. So all I need a market structure shift, fair value gap to take this sell. And target is this area. Okay. If it just keep falling, I will let this go. And then later I will just wait for taking buy. So what I have seen, market went higher, cleared the internal buy side liquidity, closed above this, tap to this line. What is this? Buy, take buy, fake breakout, take buy. Okay, the buyers didn't work. So it's going to fall to take some support as well and believe that it will come over here. And after that, the market will start to go higher. If there is a gap, I'm going to take this sell. I will avoid this sell if and only if it trade this gap. I mean, if this gap is been traded, then I'm going to avoid this sell. Okay, it has actually traded that gap. This is the last gap. Okay, it can hold the market and send it higher again. So I'm really afraid, should I keep holding this idea that market is going to trade the 50% of the regular trading or opening gap as well as the weak 50%. You remember the weak 50% that is also over here. So I'm a bit afraid about that now. Also, this sell side leak also been cleared. It's worthy to take this risk. Okay, like 387 handle, it's worthy to take risk. I'm not simply taking the entry from this gap. I'll try to take the entry from the lower quadrant of this gap. If you divide this gap, it's a measurement from my eye. Okay, so if you measure this gap, this is the lower quadrant area. So I would love to take the entry from this lower quadrant. The only problem is it came to this last gap, so it has an like huge opportunity to keep going higher for this buy side liquidity right now. That is the only problem. I will see. Okay, I'll take this risk. If I miss this trade, I'm not going to cry. Okay, I know that I should start to look for buy from that area. So I will start to look for that buy. For example, it didn't take me. Instead of that, it just keep falling and come here. I will start to look for buy from that area. Otherwise, if it just keep going higher right now, whenever it will inverse this gap, I'll start to look for buying opportunity from this inverse gap. My stop loss has covered this specific gap over here. See this, there is a very small gap. So just stop loss has covered this gap. I don't think so it will take me. I don't think so it is going to take me. Let's see. So it tapped to the gap. I'm not taking the entry from this gap. Remember, it has already tapped to this gap. I'm not trying to take the entry from here because my stop loss is not able to cover this gap. So I'm trying to take my entry from the lower quadrant level of this specific gap, which is also aligned with the 50% of this dealing range as well as the 6 on 8 level. Okay. So I'll just hook. Okay, tapped to the 50%. Let's see if it really want to fall from here or does it really would love to take me. It also trade the lower quadrant of this gap. Again, it's bit risky because it has already traded the lower quadrant, upper quadrant of the regular trading or opening gap, trade this last fair value gap, took all of the sell side liquidity. Still, that is bit risky, but I'm watching my luck over here. So it has traded the lower quadrant. You can see here, tapped to the lower quadrant and rejecting from there. My entry point was just above the lower quadrant because of my stop loss. I randomly put it over here near to the 50% of this gap over there. So if I miss it, I'm unlucky. Oh, I think I'm going to miss. Bad luck. This is so, I mean, it could take me actually, and I would have already taken a 50 handle partial or something. Unfortunately, it didn't take me. Some of you can think that why he was taking the entry after that big run. Count the candle. One, two, three, four. Within four candle, it came to this gap. So it was an immediate reaction as well. So it actually came from this dealing range high to low, the 50%. Lower quadrant of this gap, my entry point was a bit above the lower quadrant. It was like something a bit above the lower quadrant. Unfortunately, I didn't get the entry. Okay, so I'm gonna remove it. And are you going to give up? Of course not, man. There is no way to give up. What is that? Order block. Highest up close body close candle that has traded that gap. So from here to order block high is 52 handle. I can't put it over there. 39 handle, 32 handle. I'll try to take the risk from here. Target is this zone. I'm gonna frame the trade from the order block. If it close below this order block, if it doesn't close, no trade is valid. Remember that. However, if any of you got the entry, congratulations to you prematurely because you got the entry. So yeah, I miss it because I was afraid about my stop loss. So I could do that. Like I could put my stop loss here above the upper quadrant of the gap, like yesterday I have done the day before yesterday. I could do that, but I was just bit curious about this gap, last gap. So let's see. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Let's see if it can take me or not. Finally, I am in. My target is this 50% here. I hope it will work. I just covered the mean threshold of this order block, which is 34 handle actually. So I took the risk for 34 handle covering just the mean threshold of this order block. However, don't forget any sort of buy is valid now. So for example, it didn't work, keep going higher, shift the market structure, shift over here. It doesn't need to come here. It's not something like it has to do. But this is the best area for the market to reverse that area. So it doesn't need to do that. If it shift this high, immediately I will switch my bias and will start to look for the buying opportunity from the fair value cap. It is going to leave around that area to the 22 buy model. All I have covered here, just the min threshold of this order block. So low to high, this is the 50%. I've just covered the 50% of this order block by my stop loss. This is kind of forcing trade. Okay, the real entry should be from there and I should add over here. But as I missed the trade here, you saw like by tick, so I'm forcing the market to give me the entry from the order block by believing it is coming here around that area. There is no sell side liquidity left. There is nothing left. Still, I believe that it will come here. That is the best area for reversal. If it doesn't come, then shift this high. I'll start to look for buying opportunity from there. target is this extreme buy side liquidity around that area. However, this last gap doesn't have any value. So some of you can think that you can take the entry from here, body can't close above the C. No, it's not important at all because it's not holding any sell side liquidity. So it doesn't have any value. Respecting the upper quadrant of the regular trading or opening gap. Uh, so so let's see if it can really reach until the 50% of the regular trading or opening gap. Please don't get confused because of all of this line here. This line is actually the 50% range of this dealing range, high to low. 50% has been traded. Then market has, okay, I don't need that anymore. And this is the mean threshold, like this line. I'm going to remove that as well by marking a line over there. So this is the line of the mean threshold. So I'm gonna remove it, keep it as my mean threshold. Okay. It doesn't need to trade this mean threshold. If it doesn't fail to trade the mean threshold, that is the best case of scenario. But the maximum I'm thinking it is going to trade the mean threshold, then it will fall. Anytime it will shift this high, I will immediately switch to buy to take the buy for the extreme buy side liquidity. So if it shift this high, this is a valid swing high for shifting market structure. This gap, it doesn't have any value to me, no value to me at all. So you can see that it is holding the market. I'm watching the upper quadrant of the regular trading or opening gap. So I'm seeing the upper quadrant of the regular trading or opening gap is actually holding the market. That is good because my target is the 50% of the regular trading or opening gap. So if it work as a resistance, I can simply wait for the 50% of the regular trading or opening gap as my target. If any of you are in this trade by any chance, if you are in this trade, make sure you have taken a partial around here if you got the opportunity. Okay. So there, you should take some partial over here. Please do that around that area. That should be your first partial. If it provide you that first partial, you should take that on. And then you can hold the trade until that area. If it provide you the opportunity to take the partial. Luckily, I survived the week. Still didn't did the damage. So if it really would love to fall and week did the damage, that is bad luck. I just covered them in threshold. So far I can see that week missed my stop loss by tick. And if it really fall, that is good. Otherwise, anytime this high will be shifted, I'll just think about the buy. No more sell is valid to me. So if I got stopped out here, I'll wait for this high to be shifted and then look for the buying opportunity. Okay, I got stopped out. This didn't work. So I think the job is done. So all I need to see this high to be shifted and will to take the buy, only the buy. If this high is going to be shifted with a bullish fair value gap, I'll immediately take the buy. However, if it failed to take this high and closed below this order block, that is re-entry opportunity. But I don't think so. I'll go for that re-entry because it didn't respect the mean threshold of this order block. If it is a fake breakout, like one candle has closed above the order block mean threshold, then next body has closed. That is also valid. But I don't think so. It's a good idea to think about the sell anymore because the first time the order block didn't work, the second time it is going to work. I'm not sure about that because there is no sell side liquidity left. If there was a sell side liquidity, I could think about the re-entry. My only interest is to see if this high is going to be shifted and I'm going to take a buy. That is my only interest to see right now. Like Buy. Oh man, it's a huge stop loss. Target is this buy side liquidity now. I just don't know where I am going to get the entry. Let's see if it really would love to give me some entry opportunity. Wherever the gap is going to be created, I have to take the entry from there. That sell market structure shift fair value gap again, where it is going to fall, no idea. Here, upper quadrant, I have no idea. The buy, I have a valid area to look for. This is the area where I'm looking for the buy. I entered already. I don't know. I think I can put my stop loss over here because that's going to be a huge stop loss. I'm going to take this risk. Real stop loss should be there, like here. Can you do that? If you can do that, go for it. Like this should be the entry. I'm just going to take my risk with this gap over here, which is going to be a very small stop loss, 28 handle, and I'll try my luck for this buy side liquidity. Otherwise, if it stop me out and would love to trade this breakaway gap, that's gonna be disaster for me, and I will get stopped out. Unfortunately, this is a huge risk. I mean, sorry, volatile market. Like from here to here, it's kind of like 85 handle. I don't think so. It's worthy to take that risk. Market structure shift, entry fair value gap, which is over here, breakaway gap, which is over here. So I have to be very careful about these two gaps. So I'm trying to how to say that, I don't know. But I'm going to take the risk here from the entry gap, but because history repeats. So previously I've seen market failed to come to this breakaway gap. So instead of that, it trade this entry gap and then fall. So I'm trying to take my risk here from this entry gap. Now, if it doesn't work, I don't know what I have to do. I mean, I can't put my stop loss below this low. Putting the stop loss below this breakaway gap is good, but still that is risky. I again took me. We'll see. Two loss in a row. I don't need that anymore as the market has traded the breakaway gap. However, if it fall, man, that is disgusting. That is a real disgusting because I can't take the sell anymore over here. Also, the 50 minute doesn't look good to me. Seems like a very indecisive candle. Yeah, this is what it is. Those, if you are thinking about sell from this gap, please go for it. Okay, I am not going to take the sell anymore over here. Even though it came here and then maybe it will fall here, I will not take the sell. I will try to keep looking for the buy from the order block. If it doesn't do that, it come here, then I will start to look for 22 buy model again. I'm just not interested to take the sell right now because that was like unnecessary over here. If it really would love to make the trap over here, that is disgusting. That's not the order block anymore. This is the order block now. And I have no idea how can I cover the order block. I'll just do that. Without this market structure shift, or if there is no gap at all, okay, if it would happen, then I would keep looking for the selling opportunity for this 50% area. But as this market structure shift is really so beautiful and market really didn't leave any sort of sell side liquidity around that area, I'm not going to ignore this market structure shift and the main target over here, because that is a theory that market will come for the 50%. That is just a theory, but it's not actually the liquidity or something like that. Of course, it can come over here because that was obvious around that area. So maybe it will come over here. I'll look for the buy from that area again. But now taking sell is like not appropriate to me. If it was not a 22 buy model, then maybe I could think about a sell by thinking that, okay, this gap has been retested and market has cleared the buy side. So highest up close body close candle is going to be the order block or the consecutive order block. Then the market is going to fall from this order block. As the market didn't do that, I'm not going to take it. So this is the origin low. As long as this low is not going to be taken, I'm allowed able to take the buy from this order block. If this low is taken, I'm not allowed to take any short of buy. I will wait for this market to come here or here to take the buy from any of this line. If this low is taken, no order block is valid anymore. This is the origin law of the setup. So market has taken the liquidity, market structure shift, fair value gap, breakaway gap. Of course, it can come very near to the low. But as long as this origin low is not taken, I'm still interested to look for a buy only, not sell. Doesn't have any value. So here I could switch to buy, but here I can't switch to sell. Here I have to look for the buy only because the original target is this buy side. So market has to go for this buy side liquidity. I have two opportunity here to take the buy. First opportunity, I have to wait for this candle to close above this line. The second opportunity, market has to close above this gap, and I will be able to use it as a reclaimed bullish fair value gap. So I will actually catch the reclaimed bullish gap instead of the order block. This is not the order block, by the way, guys. So I'll actually catch this run from the reclaimed gap. As long as this low is not going to be taken. If this low is taken, there is no entry is valid. In any way, I can't put my stop loss below the lows, like it's nearly impossible for me. If it close above this, I'm gonna take the buy over here. I'm only allowed to take the buy. No more sell is valid to me. I can't take any short of sell anymore. If it keep falling, come here. I'll look for the buy from there. Otherwise, if it close above this reclaimed bullish cap, I'm gonna take the buy depending on this 22 old buy model. Body didn't close, no buy is valid. Falling, I don't care. The whole buying opportunity will be invalidate if this low is taken. This is the origin low. Some of you are seeing this as a sell side. No, that's not the sell side. So if it really would love to fall here, it can go for this relatively equal lows and then come here. Otherwise, if it doesn't want, I mean, if it really would love to go for the buy side, it should not clear this low over here. That is a very nice origin low. I'm thinking about a buy from this gap, but it's highly risky. So I'm not taking it from there. So I'll try to take it while the gap candle will close above this reclaimed bullish gap. The problem is my stop loss is gonna be too tight. Yeah, I have no other choice. This entry is based on this 22 buy model. As I couldn't take my entry here, covered the low of the wardrobe, I mean the origin low, and I missed the entry. Sorry, I got stopped out because of my tight stop loss. So I'm gonna still believe this same entry and the same breakaway gap, which is going to work as a reclaimed bullish gap right now. If it really would love to go higher. Otherwise, it will fall. I will hold my trade until this area. When the market will come here, I'll start to look for buy from that area, either from here or from there, any of this line. Okay. I mean, you can just let me take the sell. Now, everything is, I agree with you. Like, for example, if you really would love to take a sell from here and your stop loss is above this high, for example, you are already in this trade, you never get stopped out. So you are expecting this market will come over here. So you are holding the trade by believing that it will come over here and finally it will come here and you will get the boom. Perfectly okay. But taking sell from this gap and holding the trade for here 70 handle, I'm not really good with that. So I missed the trade here. So I tried the water block entry. Didn't work. Now this is another market structure sheet. Same case of scenario. Another bullish model according to our real target. So you want to take a buy here around that area. Stop loss at least below this low, the best is below that low because that is the origin low. So 100 handle risk for this line, I'm not good with that. This 100 handle risk. The same scenario like here, the sell, which is like absolutely not certain that market will trade this. It's not certain. Okay. So maybe you knew that it is going to trade this one. I wanted to see it to be traded, but as it didn't trade, so I was really afraid that it will come back again over here. Most importantly, when it has cleared this relatively equal lows. So this sell from here, you can take the risk here, but you can't take this risk here. Like it's like favorism. I don't think so. It's a good idea. Okay, this low is taken, so there is no more entry, at least not from here. I have to wait for a new 22 buy model. So for example, if this swing high is going to be shifted, I'll get another 22 buy model to take the buy. It doesn't need to come here. If it come here, that is good. That is really awesome. But if it doesn't come here and give me another market structure shift like here, I'll go for this buy again from this 22 buy model. I'm only interested to look for this buy side right now. So no more sell is valid to me. The sell is was only valid from here around that area. No more sell is valid to me. So I tried the buy from this 22 buy model. It didn't work. Now I'll wait for another 22 buy model to be created to take another buy. Oh man. I'm going to get the market structure shift. I'm going to take the entry. I'm not going to wait for a fair value gap to be created and then to be traded. I'm just not sure about my stop loss. I think that's cool. If I get the market structure shift. No market structure shift, no buy. And this is the 50-minute chart looks like. And Yeah, please, Marquis, if any of you would love to go for the sell, please go for it. I'm not going to switch my bias. I'm not going to take any short of sell as long as this buy side is not going to be created. I mean, it's not taken because only sell was valid from here. When this opportunity is gone, there is no more sell is valid to me. So I'm not going to take any short of sell. Any short, anytime market will give me the buying opportunity, I'll go for that. It is extremely difficult market. For example, if you want to take the sell, if you want to take the buy, both of these cases, it's bit risky, right? This market is simply just consolidating around here, like sideways over there. But still, I am only interested to take the buy for the buy side liquidity, which is residing around that area. So I'll only take the buy, even though it's risky. All I need just a small high above this line. If it go one tick above this line, I'm gonna take the entry over there, exactly over there. Not going to wait for the water block or anything. Okay, I'm already in. Stop loss has covered this small one tick gap. There is a gap over here around that area. Any of them can be traded. I don't think so. It will be come over here. Like, let me mark them. This is a gap. It can come, but I'm just interested to take entry over there. And there is a one tick gap or something like that. So my stop loss has covered both of these gap, and I'm gonna take the buy from here, going to hold the trade for this buy side liquidity around that area. So this is gonna be the last trade. I mean, if it doesn't work, then I'll say that, like, man, I'm unable to trade this market, to be honest. I tried to trade one from the water block, one from the 22 buy model. None of them worked so beautifully. I mean, it didn't work at all. And this entry I didn't get, because if I would get this trade, that could be awesome to get a 89 handle run so far. So I wouldn't need to re-entry from the water block. I wouldn't need to do that if I could get the entry over here. Unfortunately, I didn't get it. So I tried the water block sell, because my last opportunity to take the sell was from this water block until here, which is an assumption. Okay, it's not something like it has to come here. It doesn't need to come over there. If it come here, that is the best case of scenario to think about a buy. This is the 50%, which is also the regular trading or opening gap 50%. It doesn't need to come over here. So I tried the 22 buy model, which was very clean to me. Like, this swing high has shifted over here with a fair value gap to fair value gap. It also didn't work. So I waited for this market to take this low one more time, and then gave me another 22 buy model. It has provided me that I'm now going to go for this trade for this buy side liquidity. So if it doesn't work, man, it's my bad day. And it's tough price action for me, unfortunately. My stop loss is over here. That is actually covering just the breakaway gap over here. The very small breakaway gap. I hope you can see it. Like, this candle high, this candle low, just a very small gap. So it can maximum come until this gap. It is always preferable not to trade the breakaway gap, to leave it as a breakaway gap and send the market higher. It is always preferable. So yeah, it can come back again to this gap. That is absolutely acceptable. And I more importantly would love to see the 50% and the 6 on 8 level of this dealing range. So this is the 6 on 8 level. The maximum fall can happen until the breakaway gap. So my stop loss should be absolutely safe. If it doesn't work, it means it is not tradable market. I mean, by anyhow, you can't prove me that I was looking for sell, so I took the sell and I'm profitable. I was looking for buy, I took the buy and I'm profitable. Neither way, you won't be able to provide me that. So even if you look for a sell from, like, market structure sheet, fair value cap, tap to this fair value cap, you got stopped out. You took a buy, market structure sheet, fair value cap, took the buy, got stopped out. Now you look for the sell here, market structure shift, fair value cap, you took the sell here, you got stopped out. So either way, you got stopped out. This is tough market, believe it or not. So it came to the 50% dealing range, 50% high to low, 50%. 6 on 8 level is here residing with the breakaway gap. It is always preferable to not to touch the breakaway gap. Instead of that, keep going higher from at least the 50%, and from this gap, that is always preferable. I need the run toward the buy side now. Only thing was left to build the order block. So when this candle will close above this candle, that's gonna be the bullish order block, and market has an high probability to keep going higher by trading the order block over there. Yeah, it's always better to trade the AGS session now these days. I mean, it's much more easier to trade. The AGS session, London session, 7 a.m., they're much more easier to trade rather than the AM session. AM session is really so shit for last few months, not a week, few months. It's really so sick. You see this hourly candles over here. What will you say? What will you say? It will come here, take that buy side liquidity, closed here. The next candle open, fall, take the low, trade this bullish gap. There is a bullish gap. You see here from the hourly chart. This candle high, this candle low. You remember I showed you the bullish gap. It is going to be created around that area. That gap has been created here. A very small bullish gap around that area. So this is that hourly bullish gap. So market came back again to trade this hourly bullish gap. Okay, acceptable, not any issues with that. Then what should you do? Go for this obvious liquidity and the buy sell liquidity over there. But it's spending a lot of time over here. Let's see. The 50% is still holding the market. I'm happy to see that. 50% of this dealing runs low to high, 50% is over here. So it is still holding the market. This gap is holding the market. Market didn't touch the breakaway gap. Yeah, that is pity that it didn't touch the 618 level as well. But still, that is valid. So let's see if it can go higher now. Again, if it doesn't work, I'm unable to trade this market. Maybe you can, but I can't. According to the logic, it came to the hourly gap here, gave me the like liquidity has been cleared, didn't leave any liquidity over here, gave me the market structure shift with fair value gaps. It should start to go higher toward the buy side liquidity. First of all, obvious liquidity. Secondly, the liquidity we're looking for months and months and months. So it should go for that now. I'm gonna add more if it close above this order block. So for example, it has closed above this order block. I'm going to add more. This is gonna be the last trade for the morning session. If it doesn't work, I'm going to remove this one for now. I need this chart a bit cleaner. Going to remove this as well. Going to keep the regular trading hour opening gap, but not in my 1 minute chart. I'm going to remove it from my 1 minute chart. So in 1 minute chart, just the weak quadrant level will be there. And yeah, that's all. So let's see if it can close above this water block. If it do that, I'm gonna add more over there. Okay, uh, uh, why it didn't take me? Okay, now it took me. Good. You remember that was the 6 on 8 level exactly over here. That is the 6 on 8 level. Tap to this breakaway gap. Okay, it took me. So this was the last trade for this morning session. It also didn't work. So I'm not going to take any other trade. At least in this shit market, I'm not interested to add more trade over here. Okay, that is a loss. I have to accept that. Unfortunately, it didn't work. That was a good setup to me. It didn't work. Bad luck. So rest of the time, I'll just keep waiting to see how it is going to end the session. So if this trade should keep working, then this should be the order block. Or if it keep falling, then of course this is going to be invalidated if this low is going to be taken. If I were bearish, that could be my sell setup from this gap. But as I'm not bearish, so I'm not thinking about any sort of sell. I'll just keep watching how this market is going to end for this hour, like 10 to 11 silver bullet time. But that setup was really so beautiful to me. I really wanted to see this to work. Market structure shift, fair value gap, breakaway gap, keep going higher for this extreme buy side liquidity, but it didn't work. Okay. What else do you want to do? As I was saying around the beginning of this stream, that like this type of 4, 5, 6, 15-minute sideways candle, they're really so difficult to trade, to be honest. And it's also a sign of the consolidation, like a small body long week that market is going to consolidate. So if I keep trying, I'll keep losing. This is totally disgusting. But still, this is what it is. So let me know how you guys are seeing this market. Going to data low, most likely. Maybe it will go for the data low. But again, I was just saying, like, this buy side is obvious to me. So after clearing this buy side liquidity, I have the sell side liquidity here. They're the sell side liquidity, which is actually below the data low. So here is them. They are here. So I'm more interested to look for those sell side liquidity after clearing this, sorry, that buy side liquidity around that area. So my only selling opportunity was here. That was the only selling opportunity by targeting the 50% of the regular trading or opening gap and everything else. Okay. No other sell is valid to me as long as this market is not going to clear this buy side liquidity or at least above this high. As long as it's not going to go above this high, I'm not able to take any sort of sell. Maybe it is going to fall, but still selling is also not going to work over here. I mean, I don't know how you guys are seeing, but still the sell is also not going. At least until now, the sell is not going to work. Okay, I didn't see not even a single trade that you can say it worked by take a sell. In my opinion, brother, this is like shit market. Okay, it's like it's not only for today, it's almost every day. Like some run is going to happen, after that just ping pong, ping pong. So if you ask me, gun to my head, it should keep going higher for this buy side liquidity. So I tried the last buying opportunity from here. Now this is too pretty pity that I'm not able to put my stop loss below the low because of the volatility. So I just covered the breakaway gap with 43 handle stop loss. That is too much, but still that is a loss. So yeah, it just came here. I don't know why it came here. Now it seems like that bullish. Maybe it will go higher now. I'm not sure about that, by the way. But look, the sellers, they're going to get ripped over here. All I believe this market has to go higher, but I'm not able to take the buy and putting my stop loss above the low. For example, take the sell here, put my stop loss here, at least got some partial, got a stood out to the break even, good. Take the buy here, put my stop loss below this low, got a stood out, good. Take the buy here, put a stop loss below this low, going to work, going to be a profitable trader, simply. So this run, this leg, it is not bad, okay? It's not like something, oh man, why this happened over there. No, it's not bad. According to the market logics, it can do that. All it doesn't need to do to take this low, because if this low is taken, this market structure shift is going to be invalidated. Like here, market structure shift, this low is taken, it's not valid anymore around that area. So I have to wait for a new market structure shift that appeared on this area. So this is the new origin low over here that has traded this hourly bullish fair value gap. So what is left here? Nothing. Just keep looking for the buy. That's all. That is, man, like simply nothing. Oh man, I was so confident about this buy actually for the last time, because the bullish PDRA has already been traded, the hourly gap, and like this was unnecessary at all. I mean, it was not necessary. These candles just to stop me out. Bad luck. Problem is everyone is bullish since we have been going up since Asia without any sell side manipulation. So price is stuck in between. I think it can happen, brother, as well. But you see this liquidities around that areas, this supports, this lows, this is a beautiful support over here around that area. All of them has been cleared by the CPI, and market has cleared the buy side liquidity with a shallow run. Like this is an unfinished business. I hope you'll be able to see that. Like where was that I saw here? Like this high has cleared over here by a shallow run. Like if you are selling, okay, you are using this as a resistance. Just for example, you took it as a double top. You are going to watch it as a zone. Okay, so it's a zone, and you are going to put your stop loss above the zone, like above the zone somewhere here, and you are going to target the next support zone, which is over here. This is the support zone, old high, right? This is the support zone. So still it is an unfinished business. A lot of people are taking sell here because they are seeing this is a very strong resistance zone. So this market, even if I believe that this will be taken, I 100%, I mean, I'm so much confident about that. But even if I'm wrong about this buy side liquidity, this high is something that needs to be cleared. There's two logic behind this. One, old high has been cleared with one leg. It can't happen like that way. For example, this market really would love to keep falling. It should take this high one more time. So this leg has cleared this high one more time, then fall. I mean, I'm thinking about, oh, okay, now it is bearish because the old high has taken two times, at least two times. I don't believe in three drives pattern. Actually, it doesn't work according to my understanding. I don't believe in three drives pattern, but at least two. Two is something that is obvious. This is the first logic. And the second logic is this resistance zone, it is too clean to me. Even though there is a new week opening gap, I don't think so that new week opening gap is going to hold it. Instead of that, market is going to go higher and for this buy side liquidity. Look what happened around that area. It just took me. And now it is going higher. Look at this water block. So finally it built a new buy water block over here and trade this water block, leaving this gap open. Market is interested to keep going higher. So this is my bad luck, okay? Like simply took me and then going higher, unfortunately. But I was never been confused about my direction. I was looking for the sell here, and I told that the maximum fall is until this 50%, because that is the beautiful area for this market to reverse. Now it doesn't need to do that. It simply built the hourly water block, trade this hourly water block, and now it is going higher. Oh man, this is disgusting. But again, this is really difficult market. No buyers, no sellers can be profitable from here. I believe so. If you don't take 100 handle risk or something like that, if you don't take those type of risk, it should not be survived in this market. Like this is really so disgusting market. Like here, I got stopped out. If I were interested to go for the trade, I would start to take the entry from the water block again. Again, my stop loss below this water block, how much is going to cost? Like from here below the water block, right? So here, 44 handle. Okay, that was actually close. I could do that by covering the min threshold actually, 32 handle. I could do that. Now, do I really need to do that? No, I don't need to do that. Why? Because a lot of times it didn't work. One, two, three times. Maybe this is going to work this time, but I'm not interested to go for another loss just by thinking this is going to be a beautiful price action. So this is something like expectation. I'm not interested to go for another trade with my expectation. This is gonna be a revenge trade. I still believe this is going to work this time. Okay, it's not going to fall another time. So this is the min threshold. I'll just keep watching them without taking the trade. The maximum fall until this order block min threshold. This time it should really work, man. Come on. How long you wanna do the consolidation? This time it should work, in my opinion. Yeah, that is a thing. I could try to take the entry from here, from the entry fair gap, but I was really so afraid that market is not coming for this entry gap. If it could, I could do that. Maybe I could cover like still I would get a stopped out because I would put my stop loss here somewhere. So I would get a stopped out by tick around that area. Not bad, but let's see if it could work or not. It's nearly 1:2. Hope it will work. It should work. This is difficult market, man. You agree with me or not? I don't know, but this is difficult market. You can't say, man, this was a bearish market. You can't say this was a bearish bullish market. So you can't say anything over there like this way. See here, it come until there, and then this candle appeared on the chart. How did you know that it is going to happen like that way, and it is now going to fall? How did you know that? I didn't know that, and this is like something so disgusting. I think only ICT can trade this market. I don't know how, but maybe he is able to trade this market. By the way, is this happened to NQ as well? Yeah, it happened to the NQ as well. In ES? Yeah, in ES as well. So now I have the SMT as well, like here. So is this market also waiting for this SMT, smart money divergence, or something like that? Oh, by the way, I forgot about the Apex new deal actually. They have like $49 all in, 50K intraday, no activation fees, single or 5 pack, 90% off all eval account. Every intraday price action activation fees is $59. Use the code T2T. This is for the Apex trading, guys. Like this is really so cheap. Okay, $49 for 50K intraday account, like no activation fees. This is really so cheap. Otherwise, in every single account, you are going to get the 90% discount, but you have to pay a $59 activation fees, which is also cheaper. So if any of you are interested to test this wild water, you can go for this type of like cheap price action. I mean cheap price, okay, cheap price accounts. You can test them with this cheap price. So this happened. Now it is going higher. Let's see. Who is profitable today? I mean, I wanna see their face. Not their face actually. I wanna know that who is actually profitable today. For example, you took a buy here, you close the trade over here, you should be profitable. So someone maybe got the entry like this type of area, and you got some run, like you should be profitable. Or maybe you took the sell here. Okay, so just for the sake of this conversion, you took the sell here and you got the profit nearly 100 handle, something like that. Is there anyone who actually is profitable in this wild price action? Can you guys please push the like button as well, please? I don't know why my chat is not updating. Just let me check. Now it's updating. That's cool. I'm still in a trade with a stop loss at break even 855. Don't know why these days you get stopped out by manipulation and I'm left alone. No worries, man. As long as you are profitable, happy to know that. Fake trend line breakout. Mhm. My break even is immortal still. Not hit to that. That's cool, man. Just make sure you have taken some partial. What about end of the day 50K T2? I always appreciate the end of the day price action. I always appreciate because intraday price action is so like it's so only for the disciplined trader. Okay, so if for example you're not a disciplined trader but you wanna be a disciplined trader, you should try the intraday price action because that will force you to be a disciplined trader. So otherwise, like end of the day price action, you are going to get a freedom, but it's actually more expensive. In other word, intraday price action is more cheaper. So if you go for the intraday price action, that will help you to push to be a disciplined trader. But if you really are not interested about to be a disciplined trader, then you can try the intraday, I mean, sorry, the end of the day price action. That is more freedom for the traders because you don't need to worry about your intraday accounts. You took a buy here, you close the trade over there. You are so disciplined over here. You're not going to do some rush. You're not going to be greedy. You are not going to fall into any kind of trap. Nothing. So you got your run, 1:1, you closed your trade, good. Or maybe 1:2, whatever it is. You got your profit, you just close the trade. Simple. In other words, I'm not interested like that way. Otherwise, I'll take a partial around 1:1. I'll put my stop loss to the break even. I'll love to hold my trade until the buy side liquidity. Okay, in that type of scenario, you should go for the end of the day price action because that you don't need to worry about to get stopped out to the break even with some losses. I'm going to close my chart. What was this shadow? Which shadow, brother? Mohit, I gambled and lost my accounts. Big red day. Bad luck, brother. It's a difficult day. Okay, nobody can convince me this is a good day. Even if you are haters, I don't care. But this is a difficult day. So what I can do? Stop trading. That is all I can do over here. For now, I don't have anything that supports a trade. No 5 minute, no or 15-minute gaps, no liquidity taken. For me, this is just consolidation. Absolutely, it's a pure consolidation. And eventually, I believe this market will go higher, but nobody will be able to enter into that trade. Down 2,500. That's a difficult market, brother. As I told you, I mean, if you don't stop, you'll keep taking losing trade. Every time it will show this type of line, I will I will expect this time it is going to work. And then suddenly this type of candle will appear on the chart. Eventually, I still believe, okay, I'm not saying, okay, I'm not going to prove myself right. I'm not going to force you guys. I'm just explaining my understanding. Eventually, this market is going to go for this buy side liquidity. So some of you can think this is going to fall. I think you are wrong. Okay, this is just my opinion. You don't need to close your trade if you are already in a sell. You don't need to close it. Just make sure your stop loss is very tight. Okay, so you don't get stopped out with a huge loss. Eventually, I believe this market will go higher when the consolidation will be done. Okay, so in my opinion, maybe this is done because that was a shallow run that has already been cleared. Hourly gap is still holding the market. This is that hourly gap that is still holding the market. Finally, we have the SMT as well here with the ES. Why this is the SMT? Because when the market is going higher, the ES is stronger. No, man, when the market is going higher, yeah, it is true that it is stronger. But now these days, in a small period of time, ES is more stronger when it is falling. So unfortunately, this is the SMT. If you look for the long price action daily chart, then it's a fake SMT. But if you watch the small price action, this is really a pure SMT. So like from a short period of time or smaller time frame. This is the SMT. So maybe this time it is going to go higher. And even if it failed this high, I'm pretty much confident this high is going to be the target. It should take this high before falling, at least this high. And when it will be taken, this is just a small run. a small run, like just 90 handle. So I believe that buy side will be taken as well. I'm still in buy, no hit to my break even. Best of luck, brother. I hope you will get your boom reflect. I gambled CPI, took in profit. That is really dangerous. Lot of prop firm doesn't allow you to trade the news. So please be careful by trading the news. Okay. And sometimes the most important thing is here, like something like that. You took a sell here. Okay. By any chance, you took a sell. That is your target. Okay. And your stop loss is here, just for the sake of this conversation. So it's a 20 handle stop loss. After the CPI candle, you will see that you got stopped out for 81 handle. So your stop loss didn't work at all. Your 2025 handle stop loss didn't work at all. Instead of that, you got an 80 handle loss or 90 handle loss, something like that, like very near to the high. You will get a huge loss over here. Why? Because the the speed of this candle. So from a very lower time frame, like 1 second, 2 second, most of the time they build a gap. So here, from here to here, you are seeing a candle, but from 1 second chart, this is a gap. So market actually opened here around that area. There is a huge gap. So your stop loss didn't hit here. Instead of that, your stop loss got hit over there. It's a huge gap. That's why trading the news is very risky. Don't try to do that, brother. But happy for you because you got took a profit. That's really awesome. But don't keep trying that on. I got this, but not take partial break even. That's cool, man. I think I wasn't lucky enough. Sometimes it happens. Like yesterday, you remember before the 9:30 open, I took a sell. It just took me, and then big fall happened. Unfortunately, I was not in that trade when this big fall happened. If you guys remember, from this area, from this gap, so it tapped to this gap, and it took me here, and then this big fall happened. It was a fall like dream. Okay, so something like 167 handle run, and I was with 12 micro contract. If it would hit it, that could be awesome. So sometimes luck is really bad and we are really doomed. But this is what it is. Part of the game, man. This price action is tough. In every single morning session, the price is tough. For example, you waited for 9:30 to open. Okay, you didn't take entry before 9:30. So market fall, and maybe you didn't take any trade over here. Look at this huge consolidation from here to here. It's an 43. That means almost 1 hour. Almost 1 hour. This market has simply keep consolidating around that area. So this is really difficult to trade. And then when the market did the manipulation, took this relatively equal highs, look at the fall. You are not allowed to enter anywhere of this market. I can enter here, chasing market, here, chasing market, here, chasing market. Anytime you will take the sell here, it's called chasing market. Why? Market didn't clear the swing high, so you can't enter over here. It has to clear the liquidity and then fall. And if you go to your 15-minute chart, you will be more surprised. It is not going to happen only one day, it is happening almost every single day. If you compare the AGIA session, okay, I want to show you the AGIA session. So there is the AGIA session. I think it has started. Oh, whenever it has started, but we are allowed to take entry only from 8 p.m. Okay, so if you watch this AGIA session around that area, so you watch this, like what do I have in this market? Okay, market fall, take almost every single of sell side liquidity. So I'm only interested to take the buy, and then the AGIA session had started around 6, whatever it is. I'm interested only around 8 a.m. So from 8 p.m. So from there, I'm interested to go for a trade. First, I'm gonna see if I have any sort of buy side liquidity or sell side liquidity. Now I have a lot of buy side liquidity around that area. They're really so beautiful. And I have any sell side liquidity. Look over here. Does it leave any sell side liquidity? Here, here, here. Now this is something a bit beautiful sell side liquidity, something like that. This is cool, this sell side liquidity, but it's not a swing low, so it's not that much stronger. But here, this relatively equal lows around that area. Just look, watch them. How beautiful this sell side liquidity over here, right here. So market has cleared this sell side liquidity and then gave me like a bull setup around that area. So market structure sheet, fair value gap. Unfortunately, it didn't give me the entry. So no worries. Market fall again, took another liquidity. another sell side liquidity. This is the origin low that didn't been taken and it didn't leave any sort of sell side liquidity. All the lows has been cleared over here. Fall again, give me another market structure shift here or here, anywhere you look for. Gap, gap. You are interested to take the buy from that area, right? So until 10 p.m. So 8 to 10, you are allowed to go for the trade. So I missed this trade at the beginning after clearing the liquidity market structure sheet, fair value gap. I missed this buy and then market gave me another buy over here. And eventually it worked so beautifully. Yeah, I know that it takes too long. It takes too long, but it will never hit your stop loss. For example, you took this buy side liquidity from buy here and look at your stop loss, 16 handle stop loss. And you are going to target the buy side liquidity. You have this one, huge on this one, but you don't need to look for that. Like from here to this relatively equal highs, 27 handle. I'm just showing you, okay? So you don't need to be thinking that it is like, finally it reach too far, like too far, too far. You don't need to watch them. Like wherever you find good, by taking a 16 handle risk to get 30 handle, more than enough. What you have to do in New York session, I enter with 3 micro contract. In the Asia session, I'm going to enter with 6 micro contract. So in uh, New York session, I'm going to target 60 handle. In here, I'm going to target just 30 handle, right? 30 handle, something like that. So your 16 handle stop loss is gonna be like 30 handle stop loss, and your 30 handle target is going to be your 60 handle profit, something like that. Just going by the over leveraged, not over leveraged. I mean, still you are not taking a huge loss, and then you will be able to avoid this price action. It's not happening one day; it's happening every single day. You think this is tradable? I don't think so. This is tradable. Like this fall, and then this happened. If you watch the Monday price action, which is here, if I'm not wrong, look around here. Okay, so from 9:30, what is this price action? This is disaster. It's not like one day, it's almost every day. And I really don't know how it happened. Yeah, in NQ there is nothing like this, but in MNQ it happened over here. Like this candle close and then this candle open. I was watching this market and I was just, oh man, what the shit was that? No, sorry, I didn't watch this market in live. I watched it actually later. So I was confused why it happened. So I checked the NQ, but NQ there is a candle over here. That was a price action. If you watch the Asia session in that specific day, again, I'm only allowed to take entry from 8 to 10. Okay. So if you watch this market around that area, so what do I have over here? Okay. So let's see what happened in that specific day. What do I have over there? You see here, sell side liquidity, a very nice, beautiful sell side liquidity, a gap, around that area. I don't have any other sell side liquidity except this extreme one. So if you're interested to target this sell side liquidity, that is also cute. It is also good. Maybe you will find some selling opportunity. This is all about the hindsight, okay, guys. So don't think that everyone can do that in hindsight. I'm just trying to show you. For example, you are looking for a sell. Maybe you will miss the selling opportunity, and then you have to wait for another selling opportunity. But I don't see any other opportunity until 10 to take the sell. But if you are looking for a buy by seeing this sell side has been cleared over here, trade a 1 minute last gap from 50 meters, there should be a gap over here. Give you this market structure shift, fair value gap, high, high, like it went too far. Okay, so in this type of price action, all you have to do, you have to go for double leverage. So here, okay, it was highly volatile, so you don't need to double the leverage because so far it's 24 handle. And if you target like this high, for example, it's 74 handle. You even don't need that until you hit 63 handle, more than enough for being profitable. So after getting stopped out, maybe you will trail your stop loss. After taking the partial, you will get stopped out. So if you compare this, no, look, what is the difference between a good price action and bad price action? Good price action means the setups, the PDRs are going to be respected. So the PDRs over here, they are going to look, take the liquidity waiting for 8, which is going to happen here around there. So this is the 8 a.m. Didn't give me an opportunity to take entry around that area from the 22 buy model, right? So it didn't give me an opportunity. So I'm not interested to take the buy. Now, if you are bearish, by any chance you are looking for sell, maybe you are looking for a selling opportunity. I don't know what is the setup, but I don't see any setup around that area, to be honest. So you are going to avoid that sell setup. After that, it fall again, took the sell side liquidity again, and then gave you a buying opportunity. The PD areas are respecting. But if you see here, the PD areas are not respecting. So I am not afraid of this up, down, up, down, up, down. I'm afraid of the PD areas. So for example, see this fall happened here, that that low, this low has cleared over here by that low. I'm not going to argue this market to do that, but it has to done by respecting the order block, not by going to violate this order block, building a bullish setup, then take this low. It's called the manipulation. It's called the seek and destroy. So market is seeking you wherever your stop loss is, and it is destroying you. That is all is happening over here. PDRs are not going to get respected. That is difficult. So if you compare other session, like London session is so beautiful. If I go for the today's London session, let's see what happened to in today's London session. So okay, so here one high is here. It's been taken. So today's London session, I don't see any trade. Let's see the yesterday's London session. Is that today's London session? Yeah, that is today's London session. Wednesday. Where is the Tuesday? Okay, I think this is the Tuesday. Yeah, that is the Tuesday. Now look at this. I have shown you like the easiest way to trade the London session. Look for the liquidity to be built. So if you see there is a liquidity that has been built, go for a trade. So around one, which is here, around one, around that area, all you have to do on your left, mark the highs. If it happens, go for a trade. If it doesn't happen, don't go for a trade. On your left, mark the lows. This is the low. After marking them, go to your 1 minute chart. That is all you have to do. From 15-minute chart, mark the high, mark the low. And you will wait for 2 a.m. to see did it build any liquidity from 1 to 6 in this period of time. Did it build any sort of liquidity from 15-minute chart? So market came here around this area, finally built the relatively equal highs with this high. Okay, so around that area, three highs has been created around that area. So I will keep waiting for 2 p.m. sorry 2 a.m. to look for a selling opportunity. So it came here around 2 a.m. Where is that? So this is the 2 a.m. Market went higher, build 1 minute liquidity, not happy to take the sell from here because it has built the liquidity. So market fall and all of this consolidation, unfortunately, I can see from 1 minute chart, it also didn't build any sort of setup to me. According to my understanding, I don't see any setup over here. But just keep looking for this type of scenario for every single day. Yeah, you will get some trading opportunity from that logic of building liquidity. If you don't get it here, you will 100% you will get it from 7 a.m. So where is that 7 a.m. here? I think this is the 7 a.m. Yeah, that is the 7 a.m. If you don't get the entry from the London session, a beautiful trade, you will 99% I'm confident you will get the trade here 7 to 7:30. In between this area, you will get the setup 99% I'm sure. All you have to do 6 to 6:30. I mean 6, where is that? 6:30 to 7. So this is the 6:30, 6:30. Okay, from 6:30 to 7, mark the high and the low of this small area around that area. Just mark the high and the low. That's all you have to do. Now, you see this is the 6:30 around that area, around that area. So this high has been created just 1, 2, 3, 4 minutes ago. You can simply mark this high. If you don't want to mark this high, no worries, still this high is valid. That is also good. If you want to mark this high, that is the same thing. Okay, so something like without this high, you are not going to violate your rules. You are going to mark from 6:30 to 7, 6:59. You are going to mark the highs. No worries, you can mark this high. But as this high is more prominent, so you can simply go for this high and the low in between this area. So here, this is the low. From 7, all you have to wait to swipe one side, okay, either this high or that high. You need to wait for that to be taken. So you can see here, this high has cleared over here with a big run. I don't give a shit. I'm not looking for a buy. I can't take a buy. All I need to see, look for a sell. Two type of scenario here. You don't need the market structure shift. All you need a displacement. If you get displacement 1 or 2 or 3 or 5 or 6 or 10, I don't care. the lowest gap, you're going to take the entry from the lowest gap. If you're looking for sell, if you're looking for a buy from the highest gap, you're going to take a buy. All you have to do, you have to cover the last gap. Wherever the last gap is, you have to just cover that last gap. And then, like not last gap, the candle that has built the last gap. So maybe you will get a partial around 1:1, and then you'll get a stopped out around that area. I think you'll get a stopped out around that area because you just covered that on. So this is like 32 handle partial by taking 26 handle risk or something like that. So you got stopped out around that area. So if you don't find the trade around the AM session, sorry, around the London session, you will definitely get the entry from the 7 AM. So if you see here, 6:30 around that area, 6:59, which is here. So around that area. Oh, by the way, if you have the news around 8:30, the entry is not valid in between 7 to 7:30. It's not valid. That is something you have to always remember. But however, this is the high, this is the low. All you have to wait for one side to be taken in between 7 to 7:30. If none of them is taken, no trade is valid for you in this area. And I think I can show you another trade from the 7 AM from some days before. I think this is another area. Okay. So 7 here. Is that 7? Yeah, that is the 7. So 6:30. This is the 6:30, 6:59. Mark the high, mark the low, wait for one side to be taken, any of this side to be taken, and opposite side displacement. Any side will be taken, you will wait for the opposite side displacement. So you see here, 7, first what has done, this low has taken by the 7. Okay, this is the 7 candle. Until here, 6:59, you will wait to create a setup. I mean, sorry, create high and lows. 7, you will wait for one side to be taken, any of this side. This is taken. So what I am waiting for? Bearish displacement, 100% no, just the bullish displacement. And I will watch the no market structure sheet, nothing, just the bullish gap. If I have one, I have just one. If I have two, I will take the entry from the two. You can put your stop loss below this low. You don't need to put your stop loss below this low because it's just 13 handle. You don't need to take that much risk. So you can simply put it here. And how much did it give you? Like 40 handle, something like that. More than enough for being profitable. If I go for another, remember, like it's something you have to study. Okay, it's not something like you will go tomorrow and you will start to trade something like tomorrow. No, it's not something like that. You have to study them. Okay, so if you studied them, you'll see a beautiful things from this area. So around that area, 6:30 to 6:59. Okay, so 6:59 here. High, low. High is taken. All I need a bearish displacement in between 7:30. Is there any bearish displacement? Do you see any bearish displacement? There is not even a single bearish displacement. Like no displacement. Like I need the displacement. See this displacement, this displacement. There is no bearish displacement. So there is no trade in that specific day. Okay. Just 30 minutes. You are waiting. You are going to come in from your computer around 6:50 maybe, and you are going to close your computer, the chart around 7:30. That's all you have to do, like half an hour. That's all. Okay, I'm still not interested to see what is happening in this market. I can see that it's a bit bearish and it is going to fall. Let's see if it can keep fall because still it is sideways. If you go to your 15-minute chart, you'll see this is really disgusting. So let me show you another 6:30 to 7. Watch here, okay? This is something you have to study. Okay, it's not something like you are guaranteed that you are going to get a winning trade 100%. It's not something like that. So 6:59. Okay, here, watch closely. This is the low that has been created in between 6:30 to 6:59, right? This is the low here. This is the high is here. Okay, you can simply mark this high because even though it is a bit outside of the 6:30, but this is more beautiful swing high, right? Rather than this swing high. 7, what happened? The low is taken. What I'm interested? Just to take buy. All I need a bullish candle or bullish displacement. Now, to be honest, this is a bullish displacement, but I don't see any fair value gap. But if there was a gap, Now I can't take the entry from here because the run has already gone so far, right? It has gone so far. So I can't take the buy from that bullish displacement. Otherwise, according to the logic, I have to take the entry from the top gap. I don't care how many gaps do I have, but I have to take the entry from the top gap and I have to cover just the low here. So if you watch that same logic over here around that area, look, there is not even a single bullish gap, not even a single bullish gap. This is the final first gap over here around that area, right? Around that. I'm forcing the market. Okay. This is not a valid trade. I'm just showing you the logic. That is not a valid trade, but I'm just showing you the logic. You have to enter from the first gap after getting the displacement, and you have to cover the last gap with your stop loss and how much did it has provided. Now, I'm not saying that you are going to close the trade over here. I'm just saying 33 handle you are taking risk. So you're going to take a partial amount here. You put your stop loss to the break even and you will target this high over here. By trailing your stop loss, maybe eventually you will get stopped out by trailing your stop loss, or maybe you'll get stopped out to the break even. I don't care. But this is the logic. You're going to get the entry. What is the time frame? 7 to 7:30. Just by 30 minutes, you're going to this trade. If I show you another, look here, I'm not watching any higher time frame. I'm not watching any liquidity. I'm not watching anything over here. All I'm watching here, 6:30 to 7. That is all I'm watching here. Watch here one more example. I think I'll be able to give you here to 6:59. I think here. That is the 6:59. So in this zone around that area, what I'm interested to mark, high, low. This is the low. Okay. After taking this low, I need the displacement. Do I have the displacement? I don't have the displacement. Now, think like that way. Maybe this is your displacement, okay? This is your displacement. Just because it's already too far, okay? I mean, it's already too far after all of these consolidations. I prefer like the displacement should have appeared after clearing this low. The first bull run should be with a displacement. The first bull run, it should be with a displacement. Like it takes too long, but still think like that way. Okay, so this is your first gap that you have to enter. This is your last gap that you have to cover. Last gap here. Okay, so in that day, maybe you took this trade by thinking it is going to go higher, and you took a loss of 13 handle around that area. Okay, so you took a loss over there and you're just going to stop. How much is your loss? 13 handle. One day it didn't work. So I'm going to take that loss, even though that is not valid. But let's see. 13 handle, okay, it's just something you have to take. I mean, you have to accept. So let's say another day. So this is the 6:30, okay? So 6:30 is here and 6:59 is here. That is the 6:59. Again, the same thing, high, low, that all I have to mark. High is taken. Now all I need a displacement. Where? In between 6:30 to 7. So if your entry is, sorry, not 6:30 to 7. If your entry is 7:30, that is still valid. If it is 7:31, no, it's not valid. But let's see where the setup happened. So after clearing this high, so this is the displacement. No, like no confusion about this displacement. So I'm interested to take the sell here. So from that candle, that will be my sell. Stop loss is just above this high, which is 15 handle. You don't need to take it here. You can simply put it here, which is 21 handle. Now, what is that candle? 7:31. It's not a valid trade. The entry pushing button has to be before 7:30. I mean, not before 7:30, exactly at 7:30. So if it appeared 7:30, you're allowed to go for that trade. If it is 7:31, it is very restricted. No entry is valid before 7, no entry is valid after 7:30 except the FOMC day. So if it is FOMC, you're allowed to trade the until 8:30. In that type of scenario, you're allowed to go for the trade. So here in that day, you have no entry opportunities. So after that day, you are waiting for a trade. There was no trade. After the next day, there is a losing trade. Remember 13 handle. So let's see what happened in the before that specific day. So here is another. No, it's not here. I think it is here somewhere. Okay, that is a big fall, by the way. 6:30 here, 6:59, which is here, right? High, high that has been cleared. So what I'm waiting for? Only sell. No buy is valid. High is cleared. Need a displacement. Do I have a fair value gap around that area? No fair value gap. Displacement, no fair value gap. Displacement out of the time. So not to trade, no any other trade around that area. And I don't think so I'll be able to go further more because like but let's see. It's just going to give you 30 minutes, just 30 minutes to see if there is a trade or not. So far, I've seen you like lot of days there was no trade, but one losing day. So far, okay, 6:30, 6:59. High, low. So all I'm going to do, waiting for the in that day also there is no trade. Like the low has taken, but there was no bullish displacement. Finally, the bullish displacement appeared here, but the entry is around that area, which is 738. So still there is no entry. Like this price action is something like that. If you don't get the entry, or it is connected with the London session actually. The 7 a.m. is highly connected with the London session. So if you don't find something in London session, you'll definitely find something on 7 a.m. If you don't find something in 7 a.m., you'll definitely find something on London session. London session logic is wait for the liquidity to be built, either the buy side or the sell side from 15-minute chart. Look for opposite. So, for example, there is a swing high from the London session. Sorry, before the London session and around the London session, you are seeing that this market is approaching toward that that old swing high. You will immediately go to your 1 minute chart and you will wait for a inversion fair value gap over here or the bearish 22 YT model. And if you watch it, 90%, 95% of the time, you'll see London session build the liquidity. 95% of the time, London session build the liquidity. I can prove that to you. But let me see what is happening. Still, this is disgusting. Now you can say, no, brother, it is so good. So this time, this 22 bear model is working after all of this shit. Don't fall into this trap. This is absolutely shit. Don't touch any type of trade. No trade is valid over here. What you are going to do over here, simply close your chart. Don't keep trying. I beg you, man. Don't keep trying. This is something highly difficult to trade. You are 100% sure this low is going to be taken. Still don't try. You are 100% sure the buy side will be taken. Don't try. So you've tried a lot of times. It's not happening. It didn't work. Now, every time you will think it is going to work, you will get stopped out. This is called expectation trap. Don't fall into that expectation trap. It's a request to all of you. I'm going to show you some London session if I'm able to show you that. Okay. Let's start from here. In that day, I don't see any trade actually. Is that Tuesday? It's Tuesday. Okay. So I have already seen the Tuesday, so I don't need to wait for Tuesday. Let's go to the Monday. Monday we have also seen. So before Monday, Friday. So this is the Friday. So let's go to the London session. Friday London session is from 1. Okay, from here. So I will show you from the London session. All you have to do, 95% of the time, market build the liquidity in London session. So from here to 6. That is the London session. You are allowed to enter in between 2 to 5. If you're highly experienced, then you can wait for guys, please don't get confused. Okay, I'm gonna show this to you and then I'm gonna close the stream because this is really a highly difficult market for me to trade. All you have to do, look, forget everything. Okay, I know that you have a lot of experience about the London session, about the Asia session. You are an ICT PhD holder, but what I'm showing you here, either you will get a winning trade or maybe you will miss the trade, but the losing trade is going to be too small, too small. Look on your left, mark every single swing high. Okay, so this is a swing high. It should be a beautiful swing high, not like candle highs. They are the sideways candles, so don't mark this type of candle highs. Just mark the swing high like this and this, and mark the swing low. Okay, that low. They are not important because like they are above this swing low. So this is the swing low. So I'm gonna mark them now. I'll be back in 1 minute chart, so I'll be able to show you everything. So in that, this is the Friday price action. Let's go for the Thursday price action. Okay, so I think this is the Thursday price action. So Wednesday. Why is Thursday? I think this is the This was the Friday. I think this is the Thursday. Yeah. 6. Again, this is only connected with the London session. So here, this is disgusting price action. All you have to do, look on your left, mark the low and the high. So this is the low and this is a high. This is a high. So I'll just go for 1 week. Okay. You will do the rest by yourself. I'll just go by 1 week and you will do that to the rest by yourself. 6, 1. On your left, mark every swing low and the swing high. Just mark them. And I think I'll just go one more or two more. Okay. Just two more. So yeah, here 6, 1. Look on your left, mark the high and the low. I don't see any other high, prominent high. I mean, you can look on your left, long left to mark the highs. They are also like, for example, this price action here. I don't have any other high. So except this high, I have a lot of highs here as well. If you mark them as well, that is also valid. Like mark it, mark it. You don't need to look like simply here. You have to look on your left price action. Wherever the swing highs are created, has been created. Just you have to look for them. Where is the old swing highs are have been created from your 15 minutes or so. Let me go one more session and then I'll go back to 1 minute chart. Okay, here and here. Okay, again, look on your left, mark the high, which is here. Okay, this is a high, this is a high, this is a low over here, and this is a low over here. Now, as an hindsight, I can see this market never go outside of this zone, so I don't need to mark them here. Now, if you are when you are trading, you don't know that it will go higher or not. So in that type of scenario, you have to mark those highs as well by yourself. So now, if I go to the 1 minute chart and if I start from the beginning, where did I start? Okay, so I think this is the last time I have marked it. Okay, perfect. Around here. Okay, you are only allowed to take the entry in between 2 to 5. So now I'm going to go for that 2. If you're highly experienced, then you are allowed to go for 5:30. Otherwise, if it is your beginning, don't wait for that. All you have to do, wait for this market to come near or through the old high or old low. Now I know this is the highs, but when the market enter into one, okay, so which is one here, it never come to near to this highs, right? Never come. So after the 1 a.m., market came near to this area. So here is two opportunities here, either 22 buy model or the inversion fair value gap. Now, first of all, I would love to look for the buy. Why? Because this market came near to an old low. So I'm only interested to look for a buy. As you can see here, there's a gap, inverse gap. You don't need to look for any sort of inverse gap. It came here and just inversed a gap. You are allowed to take an entry from this gap. So for example, old low. Remember, this is an old low. Sorry, this is an old low around that area from the 15-minute chart. Okay, so it came here, build a inverse gap over here as well as the 22 buy model. So if you get the entry below the 22 buy model, then you are going to take the entry from the inverse gap. If you get the entry from the 22 Y2 model below the inverse gap, then you will go for the 22 buy model. So if I see this market structure shift, fair value gap, it has already built the inverse gap. I don't need to wait for the 22 buy model. So I'm interested to take the buy here. Stop loss is below this low, below that low. Target is the next high, wherever the next high is. In the meantime, you're going to take a partial around 1:1. For me, before I love to take a partial, I love to close the London session around 15 handle previously. Okay. My maximum loss is 15 handle. My maximum profit is 15 handle, something like that around the London session because it was low volatility, if you guys remember. But as it is like highly volatile market, I highly appreciate to take maximum 20 handle risk and maximum hold out for 25 handle. Just simply close the trade around 25 handle. That is the best area from the inverse gap. Logic is it came to this old low, and I'm only interested to take the buy. If it would come near to old high, I would start to look for sell. So here, this is the buying opportunity that has been created around that area, and then maybe there was some other buying opportunity. I'm not interested to look for them. So that could be a very small trade from the London session. The problem is your stop loss is 20 handle maximum, remember. So if you can put your stop loss here and it is still 20 handle, you're good to go with that. You can take a partial over here, put a stop loss to the break even, send the market, let the market go ahead as long as it wants. Otherwise, you'll get stopped out to the break even with that like 25 handle stop loss or something like that. So that could be the first trade. Profit. I know that you're not going to get 100 handle profit over here, 100 handle, 200 handle. You're not going to get that. But to take that 100 handle profit, you have to take a risk of for 40 handle, right? Here, your risk is maximum 20 handle. So all you have to do, you have to just go for 25 handle. That's all. You can just go over leverage. Like 3 micro contract you usually take, you will go for 5 micro contract. That's all. 5 micro contract for 25 handle, $250. 10 micro contract for 25 handle, 250 microconduct. But before that, you have to watch how many times it actually works. This is the first Monday. Sorry, first London session. Let's see the next London session. After seeing this, showing this, I'm going to close the stream. Don't worry. I'm not going to kill your time. So here, yeah, that is an high. So first the market came near to the high, old high. Okay, this is the old low. Market never come to this old low. So what I'm interested to do, only for sell. No buy is valid to me. Only to sell. All I have to do, I have to wait for 2 to 5 or 5:30. Okay, maximum 5:30. It came here around 2 p.m. So what I'm interested to do now, only to take sell. What type of setup is valid? Inverse or 22 bear model. Any of this is valid. So let's first see if there is any inverse gap. Inverse gap means there will be a bullish gap that will be inversed. Okay. So let's see here. This is the first bullish gap around that area that has to be inversed. Now, did it inverse over here? I think you guys will be able to see it if I extend it a bit like here. It didn't inverse, okay? First of all. So the inverse gap is not valid. So what is my next opportunity? What I'm looking for? Only sell. No buy is valid to me. So only sell is valid. So let's see, do I have any 22 bear model? Now you can look for this as a market structure shift if you want, or this is also valid. For the beauty of this looking, I'm just going to mark first what I'm interested to do. Only sell. Why? It came near to old high in between 1 to 5 or 1 to 6. It came near to the high. So that's why I'm only interested to take the sell. No buy is valid to me. Market structure shift, fair value gap. Okay, fair value gap. I know that my maximum risk should be 20 handle, right? So above this high is that 20 handle, less than 20 handle, 13 handle. So go for 10 micro contract. Why? Your loss is like 30 handle. So 13 handle and your maximum target 25 handle. So which is here around that area. That is your 25 handle profit from the London session. The second day, a very next day, before taking yesterday's 25 handle, after today, I mean, after that, I'm going to get another 25 handle. Now, it went until this 44 handle. I don't care. I'm going to simply close my trade around 25 handle. That's all. As long as my stop loss is 20 handle, I'm just simply going to close my trade around 25 handle. After that, what happened? I don't give a shit. That's the trade is done. First, I'll look for the inverse gap if there is any, because that most of the time inverse gap happens. Okay, most of the time inverse gap is much more easier to catch in the London session. As this didn't inverse, I'm interested now. Look, this is also an inverse gap. Okay, so for example, you don't want to look for this 22 buy model, sell model. Okay, so instead of this 22 sell model, you're saying that brother, this didn't inverse, but it has been inversed. It has been inversed. So this candle inversed it. So I'm interested to take the sell from this inverse gap. Valid. Nothing is wrong with that. Nothing is wrong with that. So you are going to get like like the same type of entry from the 22 model, like almost the same entry. I don't know how to say that, but like both of the gap, 22 IT model and the inverse gap are around the same area. Whatever is going to create first, go for that. This is hindsight, so I'm confused. I don't know what I would do in this type of scenario. Maybe I would wait for 22 cell model in this case of scenario, because the first time it just didn't work. So maybe I would wait for 22 by cell model. Otherwise, this inverse gap is also valid. Determine what you are looking for, buy or sell. Sell. Why? It came near to the old high, or maybe it surpassed the old high. So I'm only interested to look for sell. No more buy is valid to me. Okay. However, remember this old high is over here. So maybe you are not interested to take the sell from the old high. So you are interested to take the sell from that area. It is also valid. This is the old high, right? In between 2 to 530. Came near to the old high, build the liquidity. Market structure shift. Fair value gap. Entry from the fair value gap. Stop loss. Remember, above this high, it has to be 20 handle. So you are going to take maximum 20 handle risk. Your target is 25 handle. How much it has fallen? I think it has fallen nearly 100 handle. I don't need the 100 handle. I just need 25 handle. That's all. Like 25 handle. Maybe I'll take some partial. I'll let the market to fall, keep falling. Maybe. Otherwise, I'll simply close the trade around that area. Okay. So something like that. Let's go to other market, other day. Let's see what happened in other day. So this is another day. Came near to the old high. This is the old low. Remember? This is the old low. So where the market came near to the old high, when you are allowed to take the entry in between 2 to 530. Okay. So 530. Okay. So it came near to the old high. Before the 2 a.m., there is a setup. I don't care. All I need to enter exactly around the 2 a.m. Look what happened at first. This is the highest gap, right? It has been inversed. So there, this candle inversed the gap. But unfortunately, I didn't get the entry over here. So what I'm going to do? I'm going to look for the 22 bear model. Do I have any? Okay, I have this 22 bear model around this area. But if I take the entry around that area, for example, I took the entry here. I'm not able to put my stop loss above this high, which is going to be 47 handle. So I can take an entry over there and I can put my stop loss over here. For the sake of this conversation, think like you got this trade and you got stopped out over here. Just for the sake of this conversation, even though you should not do that, because the market structure shift should happen here, exactly to the top, not like in this type of bottom. So this should be the market structure shift. This should be the fair value gap. You should enter over here, not after this big fall. But for the sake of this conversion, think you took this trade and your maximum. Remember, I don't care. You should put stop loss here or here. I don't care. All I know, your maximum stop loss should be 20 handle. Wherever it is going to be, that should be 20 handle here. And your target is going to be 25 handle. So something like that. If it doesn't work, you will keep waiting. Why? Because it came near to the old high. So you are only interested to take the sell. No buy is valid to me. Okay. So something like that. So here you got another market structure shift over here. So after this whole consolidation, you got stopped out. And then market come here. Look, there is no inversion gap. Simply no inversion gap. No inversion gap at all. So what happened actually? This old inversion gap here, market came to trade. Excuse me. You are going to see this most of the time in London session. This is really so beautiful. However, you're not going to use this old inversion gap, because this is a kind of like a lot of time it takes to come here. It's not an immediate reaction. So you're not allowed to take the entry from this inverse gap anymore. You got 22 bear model here. See this market structure shift here. Also, you have the inverse gap around that area, but you didn't get the entry from this inverse gap, unfortunately. So you got the market structure shift, another fair value gap, which is an immediate reaction. Your maximum stop loss is going to be 20 handle, so which is here around there, that area. Okay. And your target is 25 handle, which is a pretty much easy. Okay. 25 handle, so you got a 20 handle loss. Maybe in that day you just mitigate your loss. I don't know what to say. Like if you see the yesterday's price action over here around that area, if you hold the trade, you're going to be like I don't know what to say. Same here. If you, after taking the 25 handle partial, putting your stop loss to the break even, if you hold your trade, it's gonna give you like 158 handle. Now the magic. You remember the old low? Until now, whatever I have shown you, just old high has been traded, or maybe just one old low is been traded. But in that day, market has traded both old high and old low over here. Remember, I marked every single old low. It came near to the old high. It went through the old high. I don't care. It came near to the old low. So what I'm looking for now, the buy. You don't need that, by the way. You are already profitable over here. But maybe you are watching the market. Okay. So it came near to the old high, old low. So you are going to mark the inverse gap, which is here. It actually take too much time, to be honest, to be a inverse gap, but still, if you want to use it, you can use it. But I highly appreciate not to use it because it takes too long. I need immediate reaction. Like immediately it will build the inverse gap and immediately it will go go toward the direction. But actually it didn't happen here. It also built the 22 buy model, but there was no entry opportunity. I don't see any entry opportunity. So yeah, even though there was a buying opportunity, there was an opportunity to take the buy as well because market came to the old low. But unfortunately, I don't see any entry opportunity. What is more, this is the third opportunity, okay, in that specific day because you have already been profitable over here. Around that area, you were already been profitable. So that was the next opportunity if you really would love to care about that. Let's see other day what happened in that specific day. So yeah, in that day, market never come in near to the old high. It never come, but it came near to the old low. Remember, from the 50 minutes chart, it came near to the old low. It has to be near to the old low. So I'm in that day. I'm not worrying about taking any buy, any sell anymore. I'm only interested to take the buy. If there is a buying opportunity, I'm gonna take that buy. So my limited period of time is 5:30 from 2. So where is 2? This is the 2, okay? So think like that way because the setup has created after 2 years. So first, this market came here near to the old low. So what you are going to look for at first? First opportunity to take the buy from the inverse gap. Watch closely. This is the candle. This is the candle that has closed above this old gap. That candle, okay? Then next, this candle failed, but the next candle tapped to the inverse gap. Entry, your maximum stop loss should be 20 handle, but I can just simply cover this low with 16 handle. Do I really care about 20 handle? No. How much did it provided you? How many loss did you get so far? This is so difficult, I don't believe so. So 71 handle, maybe you have taken a partial around 25. This is forbidden. All you have to do, you have to be very strict with 25 handle. You have to take the 25 handle partial or whatever it is, or close the trade, and then you can hold your trade as long as you want. Like it has provided you 71 handle. You even don't need that 71 handle, man. Come on. Like here in that day, around 2, nothing to happen. Why? Because the old low near market is not near to the old low. Market is not near to the old high. In between 1 to 6. So I'm only interested to see this market to come near to this old low or near to this old high or old high, wherever it is going for that, okay? In that day, okay? How many losing trade did you get? So here, another old high, which is here, old high, which is here, okay? So today I don't need to worry about the old low anymore. Why? Because I can like I'm watching the market from here. Okay, so market enter into one. Okay, like you don't need to be here around one. So you should be around two, around that area. You should be there, and like so fast. You have to mark the old high, old low, all of these things from 15 minutes yet, not from 1 minute yet. You have to mark them, and then you have to keep watching. Okay, so it's still nothing because this is the old high, this is the old low. Market is not near to the old high or old low. So it is going higher, lower, higher, lower. I don't care. I don't care. I don't care. I don't care. I don't. Okay. Okay. Market is very near to this old low. So this is the area where I will start to look for an opportunity around that area. Okay. So again, I'm come here. Okay. So this is the first opportunity. I don't think so. This is the first opportunity, but let me check actually. Yeah, very near to this old high. So yeah, I will go for that because this is very near to the old high and it has closed below this. I mean, sorry, below this fair value gap. So yeah, of course, I'll go for that. Okay, so here entry, stop loss above the high, right? Just above this high. 15 handle risk. So I took that 15 handle risk and maybe I got stopped out. Okay, no problem. I'm now interested to look for another opportunity. Is there any 22 bear model? No. Any inverse gap? No. Any bear model? No. Any inverse gap? No. Like keep watching, keep watching, keep watching, keep watching. Okay. So what is could be where it could be? Okay. In that day, it was really disaster price action. I mean, it's so up and down, up and down, up and down. Maybe you will try one or two times because except this one, I don't really see any other. Uh, like this type of inverse gap is not valid. Okay, like it takes too many time to build an inverse gap. So there was a finally a 22 bear model, but it is also risky because after all of this up down up down up down, finally you got a bear. You are only interested to take the sell. No buy is valid to me. Just keep that in your mind. So you are only interested to take the sell. No buy is valid to you. So maybe you will go for one more trade, or it will work, or maybe it is not going to work. I don't know, but I don't see really a beautiful opportunity except this one. As an hindsight, maybe you will be able to survive until here, or maybe you won't be able. I don't know. Maybe you'll stop with this 15 handle loss in that specific day, or maybe you'll try one more time, and that will be another 20 handle loss. So that day may be a losing day, maybe. So let's see if I have marked any other. Actually, I don't think so. I have marked any other. Yeah, I didn't mark any other. So yeah, one day maybe you take some losses over there. So it's something like it happens, man. And look at this price action. Don't touch it. Simply don't touch it. That was about the London session. So if you don't find something in London session, you will obviously find something on AGS. I mean, in 7 a.m. Now, why I don't trade the London session? That is the only period where I actually sleep. Okay, so around the London session, most of the time I sleep. That's why I'm not able to do the London session. But I have done some London session live as well previously. I mean, last year, I guess. I don't remember exactly. I did some London session. I show you how to go for the trade in live market. Okay, it's hindsight right now, but I showed you in live market as well. Again, whatever theory I just have shared to you, apply them for your practice, and later come back to me and tell me, brother, it doesn't work. Only thing you can't violate, and that is 25 handle partial or take profit. 20 handle is stop loss maximum. By the way, if it is less than 20 handle, it is much better. Okay, but 20 handle should be the maximum stop loss, and 25 handle should be must be closing the trade. We used to go for 15 handle actually, but now in this volatile market, we can't do that anymore. So we just look for the 25 handle. That's pretty much good. And now you'll say, brother, this is a very small run. Just increase your leverage. Okay. Because here, when I'm trying to take a buy, right, from here. So for example, I'm trying to take a buy. My minimum stop loss is going to be 50 handle. So 50 handle, I'm going to go with 3 micro contract or 5 micro contract. But when I'm going to take a 15 handle risk, am I going to go with this same 3 micro contract entry? Of course not, man. I'm going to go for 6 micro contract, double my contract size because my stop loss is smaller and I'm able to put my stop loss in the most logical level. So the thing I showed you guys, I know it's so much boring and you don't like to listen them. Of course, I appreciate that. You don't need to listen to me. But I showed you, like, if you compare the morning session for last few months, it's not like for just for today. For last few months, the morning session is disaster. I mean, if you fail to take the first trade, you are going to be doomed. For the next of the time, it's just simply blow your mind and you are going to I mean, I don't know what to say. So you have to catch the first run. And sometimes what happened? The first run, 9:30 open, market just open and started to fall without giving you any opportunity. Open, market keep going higher without giving you any opportunity. So that is really disgusting now these days. So if you guys really interested about London session, that's the theory I shared you. Practice them at least 1 month. After that, tell me does it work? It's free money, man. It's easy money. So if you ask me if I were not sleeping around the London stand, even though I love the AM session, except for last few months, I don't know why it's really so difficult market. Like this market, and eventually it is falling. I was thinking eventually it will go higher, take the buy side liquidity. Now it didn't do that. I'm absolutely right. Okay, I'm wrong about my direction. Market is going to fall and it's going to take the data low and the sell side liquidity maybe. Like there is some sell side liquidity around that. I don't remember where I marked them, but there is some sell side liquidity. Maybe they're going for that. Whatever it is. Do you really think you can? you can get a you how did you know that this is going to work over here? So you tried the sell here, it didn't work. You tried the sell here, it didn't work. You tried the sell here, it didn't work. And then finally, maybe you took the sell here and it is now going to work. Before getting this one, you are already blown your account. You have already blown your account. So that is all I think for today. Yeah, that is a really bad day for me. I have no shame to accept that because, like, so that is the 50% of that finally it came to this 50%. So let's see if it can reverse from there. Also, I believe that it tapped to the regular trading or opening gap 50%. Look at the 15-minute candles, man. Just look at them. How disgusting. So that is the closing and that is the opening. Yeah, it missed the regular trading or opening gap 50% a bit. It would be awesome if it could trade the 50% regular trading or opening gap as well. That would be awesome. There is the hourly gap that has not been breached yet. I mean, market still didn't close below this hourly bullish gap. So we'll see how this is going to close. But if you ask me, man, this is really so difficult market. You agree with me or not? I don't know, but this is really so difficult market to trade. Yeah, we are going for the data candle low, brother. Maybe we'll see. Do you think after date, weak market will hunt buy side after date? After date, what do you mean by that, brother? I have a 98 loss today from my Apex account. I had a 140 loss yesterday as well. Tough market to trade. Done for now. Maybe I'll trade Asia. Yeah, we should look for that, man. It's really awesome to trade the Asia market, London market, 7 a.m. It's easier. PM session is also much more easier rather than this AM session. I don't know why, but it's really so difficult now these days. It's really so difficult to trade this market. Like, what the hell is this, man? Eventually it fall, but in live market, taking entries, holding the trade for this long, Tony can do that. Okay, he actually love to take the entry here and then close the trade there. By anyhow, he's really a genius, to be honest. You guys know that, right? If you are with us in our Discord, then you know that. Tony actually love to take entry at the beginning, so his stop loss is something like this. I don't know how, but by anyhow, every time he actually skip I mean, market doesn't stop him out like every day. It is not something like one day, it's every day. So he actually got this type of entries, but he's really awesome, to be honest. I wish I could trade like him, like this type of small loss, small stop loss. I always dream about this. However, like, I think except ICT or Tony or some people like them can trade this market. Otherwise, like me, no, I can't trade this market. It's really disgusting. Uh, data. Sorry. Okay, I don't look for the data low. Okay, to be honest, it's not a liquidity to me. Yeah, except NFP. NFP data is something like market who is willing to clear. Okay, NFP data, but CPI is absolutely different. CPI is something. This data is something else. I don't know why, but it's something else. So I really don't care about the data low or data high. I only care about the liquidity. So to me, I don't see this data low leave any sort of liquidity. Instead of that, I can see that this data low actually trade this gap so beautifully, that trade the last gap. Okay, this is the last gap that is holding this sell side liquidity around that area. This sell side liquidity is getting holded by this last gap. So what happened? This data came here, last gap stopped the market, sent the market higher, and finally cleared the minor buy side liquidity. It needed to clear minor sell side liquidity that has been cleared here. This relatively equal loss that has been cleared, and then market actually traded a lot of times. What it is trading? The near regular trading or opening gap 50%. The weak quadrant level from 15-minute chart. This is also the last fair value gap to me. So this candle here, let me remove this regular trading or opening gap. So here to here, last fair value gap, like this type of last fair value gap, okay? And then I'm watching the buy side liquidity. which is over here. So only I care about this buy side liquidity. I don't care about anything else. As long as this buy side is not going to be cleared, like this high, that high, that high, that high, that is also included. Okay. So something like this. Yeah. So as long as they're not going to be cleared, I'm not interested to look for sell. After clearing this buy side liquidity, then I'll be confused about the target because I have some sell side here that is really so beautiful around that area. This sell side liquidity here and that obvious sell side liquidity around that area, like here to here, this relatively equal lows. I'll be curious about them. But right now, just because of data low, no, I'm not interested to take the sell. I'm only interested to take the buy from every single bullish PDRA. For example, from here, from here, I'll try to keep looking for the buying opportunity for this buy side liquidity around that area. My opinion, by the way. Dear soul, how brother? How are you, brother? How is your trading? Absolutely shit, man. How was your trading, man? Was that good? Don't worry, brother. We are in August now. It's going to be tough until September. Yeah, that is also true. August last week is the week where we should not touch the market. August last week, simply don't touch the market. If you trade the August last week, I promise you, brother, this price action is nothing comparing to August last week. So yeah, August last week we should avoid trading, but otherwise, like until the 21st of August, it should be good, a bit good. In my laugh my as of, I'm doing fine. That's cool, man. I'm happy to hear that you're doing good. That's really good. I'm just going to close the stream actually for today because this is really disgusting. If I keep trying, maybe I'll keep blowing the account. I mean, to be honest, this is really disgusting. I tried 3 trade, none of them worked, to be honest. The first one, if it would take me, just by tick, it missed me. Maybe I would be already profitable. I would not force any other trade. But as the first trade didn't work, no other trade actually worked for me. We are at 50% of the opening range gap now almost. Yeah, we'll see, brother. I mean, if it can reverse from the 50% of the, or like the data low, if you see this is a liquidity, please go for it. But again, I'm saying that this is not a liquidity to me. I don't see the data low except the NFP data low is data low, data high is bit different. But otherwise the data low CPI NFP, sorry, CPI, FOMC, PPI, then PMI, the data high low doesn't have any value to me, to be honest. I don't have any value about those type of data. So this last gap is aligned with the hourly bullish gap from 15-minute chart, hourly 15-minute bullish gap over here. From 1-minute chart, 1-minute last fair value gap over here. So every job is done over here. It should start to go higher for the buy side liquid, which is around that area. So again, we'll see. Okay, we'll see it tomorrow. Did it really clear the data low, or did it reverse from the best area for the reversal, which is the 50% from both 15-minute week 50% plus the new regular trading or opening gap 50%. It doesn't need to trade them, but if it trade it and then reverse, that is the best area. So, for example, if I waited for that things, maybe I would get an opportunity to take the buy. However, I don't know what should I do before it happened in this type of price action, which is absolutely seek and destroy. So yeah, we'll let this go. Bro, today any giveaway? I don't think so. See you tomorrow, brother. This is a difficult market. So please close your stream. I mean, sorry, chart and wait for the next beautiful day. Okay. So until the next time, cheers, guys.